All right, good morning, folks. My name is Great Okonkwo, and I'm the CEO of Diamond Ethical, a financial loan broker firm here in Texas, the great state of Texas. So today I'm coming to describe to you guys the benefits of becoming a joint venture capital partner with us today. We are looking for joint venture capital partners who are ready to make an adult income. I'm talking about Well, you're going to see as I go. I'm talking about adult income of 30 to 100,000 every single month. And that is not an exaggeration. That is based on, the projection we're going to make today. Now, there are four ways you can do business with us. Four ways you can do business with us. You are either a client who needs funding. You're either, that's one. Two, you're either an affiliate who just refers or drives traffic to a landing page that we create for you. And that's number two. Now, number three, you're either a financial literacy educator who educates our clients when we bring them on board. When we onboard them, you educate them every week. And lastly, you are a joint venture capital partner now, which requires a little bit more responsibility. However, it makes a ton of money more than the other two, which is the financial literacy and the affiliate program. Now, the other one is just a client. So these are four ways you do business with us. Now, but this particular video is about the joint venture partner incubator revenue model and income projection we're going to be making today to describe. Now, as we're started, I want to state this projection is based on the fact that we want to enroll into our incubator. Now, remember, this joint venture is basically for the incubator program and access to capital, linked to it on the side. However, the projection is based on bringing or enrolling in 100 incubator clients a quarter. So a quarter is 3 months. So in 3 months, we want to enroll 100 clients. Now, this is a little bit being conservative about it because you can enroll about 100 in a month. Anyway, let's get to it. So if it's 100 a month, we're projecting that's 33 enrolled clients per month. If it's 100 a quarter, it's approximately 33 clients per month that we're going to be enrolling. So let's start with the expenses you're going to have when you come into business, because most of the time you have to make an expense before you make a profit in a business, right? If not all the time, almost always. I can't think of a time that you don't do it like that, but let's just, for the sake of reality, there are always exceptions. So the expense you're going to have being a joint venture capital, this is what it is. It is actually is $25,000 to become a joint venture capital partner. However, we've broken it down for you into $250 payments per week. So if you're going to be paying, that's $250 a week, and that's $1,000 a month, right? If you're going to be paying $1,000 a month to generate the type of income we're going to talk about today, you would understand why. Now, most of these online marketing companies, whatever, they'll sell you courses for $2,500, all that good stuff, but most people never make money with it, right? But this one is you're going to see how valuable it is and the what we're going to bring to the table, right? So this is called the incubator licensure fee. I'm going to blow your mind because you've never heard anything like this probably. But the licensing fee is what gives us the ability, to have the joint venture. So you're paying us a licensing fee of about $1,000 a month, which is something you can actually go get financing for it and come pay us if you want to, the 25,000, right? For the licensing fee. We're not a franchise. It's just a cost to make, to be a joint venture with you, right? Or you can just go through us and we finance it at 0%, and you just pay 250 a week. That's it. 250 a week to make a ton of money. Well, I'm going to explain the ton of money you're going to make. And then at the end of paying the license fee, we're going to credit you, not credit, no, not credit. We're going to give you back the $25,000 to do whatever you want to do with it. Isn't that amazing? So anyway, let me not freak you out, because some things they say is too good to be true. This is not one of them. A wise man once said, "Too good to be true means it's too true to be good." That's bad. That's bad. Having that kind of thought is bad, because if something is too good to be true, you have to elevate what you consider good and what you consider true. I'm not here to teach you on psychology. I'm talking about business right now. But your mindset has to play a huge role. So anyway, one of the things you're going to spend is the licensing fee, which is 250 a week. Now to get started is 250, by the way. I'm saying it up front. So just so you know, if you don't want to listen to the rest of the video, you can tune out. It's absolutely fine. Okay. So if you want to hear, if you want to hear the rest of the goodies in it, you have to stick around. But I'm giving it to you straight from the top. No playing around. I'm not one of those internet marketers, that's wait to the end of the video. So anyway, you pay 250 to get it started with us. The setup fee, very minimal amount, 250 to get started as a joint venture capital partner, and then 250 a week after that. That's it. So the next cost you might incur is the startup client cost. So let's explain this first of all. The clients we're going to enroll into the incubator are going to pay $999. Okay? And the 990 out of the $999 that they're going to pay to enroll into our incubator. If you don't know much about our incubator, we have a video on that. But so here, the $999 that they're going to pay, about 700 of that is going to be used to set up their business venture. That is what we're going to spend. The $299 left from it is part of the tax we're going to pay for it, because we're going to be doing a lot of things for them. So the 700 is what we're going to split. Otherwise, we're going to be negative. It's the cost of making business on our own end. So the 299 is going to be for that. And remember, this is refundable. This is refunded to the client, by the way. So it's as if we're not making any money out of it, right? So 999 is what the client is going to pay to enroll in our program. 299 is what we're going to use to pay the taxes and make a little ends meet, all that. And then 700 from it is what we're going to use to set up the business and split with you. Okay, so that's that is what the client is going to pay to enroll. Now we have what we call the key person policy when the client enrolls, and once we get them to the point where we're going to get the funding, we need to have a collateralized asset. That is, we're going to use a key person policy in this case because of the lenders we work with. A key person policy pays out typically $1,000 to the insurance agent that writes it. So you don't have to worry about that. We have someone that's going to write it for you if you don't have an insurance agent. So if you don't have an insurance license, so you don't technically have to be, licensed with an insurance, product, to write the key person policy. We have people to do it. However, you make a lot more money if you get the insurance license. Okay, but you don't let that deter you, because you're still going to make money. Now we have what we call the performance fee. The performance fee is after we've gotten the client the first tranche of funding, the first draw of funding, because most clients might not qualify for 100,000 once, like a huge lump of it. We have to break it down into like 3 or 4 draws, So some will qualify for 25 right away, some will qualify for 50 right away or less, just different draws. But the first draw will get paid 6% of the whole minimum $100,000. So if the client if they're qualifying for only 100,000, we're getting paid minimum of 6,000, right? In the joint venture. Now we're going to split this 6,000. You're going to make 3. We're going to make 3, right? So now imagine the more money they qualify for, the more money we're going to make it in the joint venture. And remember, we have to deduct that amount at the first draw. We don't have to wait till the last draw to deduct the 6%. And it's going to be in the agreement with the client. So 3 things you got to understand, right? From the client's perspective, they're going to pay $9.99. The client is also going to pay for the key person policy, usually a year's worth of premium. They'll pay it one time. That's what most lenders require, so that when they get the funding, they won't stop paying it at that time. That's not good. So most lenders require that they get an annual premium. So $9.99 enrollment fee, which is refundable deposit. Then about $1,000 if it's depending on the age and all those kind of things that insurance people do. And then the third is the 6% performance fee that the client is going to pay. Now there's another one the client is going to pay that is called that is a $99 weekly fee that they're going to pay. Okay. Now we're going to split that as well. However, the $99, we have about $25 out of it, and we're going to split about $29, and we're going to split about 70 because, like I said, with the $9.99, it's the same concept. But anyway, I'm giving you all the bad news and kind of mixed with good as well, so we get it out of the way. Okay. So now, what if we get, which is not so hard because we're going to provide you with leads, home-based businesses that just created entities in the database. We have a database of leads all over the nation of the United States. We have these leads accessible. All you have to do is contact them and make an appointment. You understand? So very simple, get it going. So anyway, we have, once we secure the 33 enrolled clients from the $9.99, it's going to generate on the first month $32,967, about $33,000, right? Now just from the $9.99. Now we haven't deducted the expenses, right? And then we have the $1,000 key person policy. When we get 33 people, that is 33,000 worth of just key person policies. And then on the first month, we're not going to get any income coming in the first month. So it's going to be a little dry because usually the funding takes place after 30 days. So we're going to look forward to the 6% of the funding amount on the second month. So anyway, for the first month, approximately 33,000, and the other 33,000 from the deposit is going to be of course, the $9.99 from the 33 clients that we're going to be working with, and then the key person policy, we're going to make approximately $65,967 in the joint venture, right? Now let's now deduct the expenses from it. Okay. Remember we talked about the setup fee, right? I don't know if you guys recall. The $9.99 is divided into 2, right? We're going to be deducting the $700 is what we're going to use to set them up, right? Remember, guys? Okay. So that $700 is what we're taking away here. So 700 times 33, which is what we're going to use to set them up. Remember, they're going to be a setup cost. So then we have the incubator licensing fee we deducted. So 23,100 is from the 33 enrolled clients for the setup fee of $700. Technically, it's $9.99, but then now this is the part that it's very interesting. Once we generate this amount of money, we highly recommend that you get a salary. Now this salary is going to be from your portion of the 50% that we're going to split, right? But we recommend that you get a salary of $10,000 minimum, because with $10,000 salary, you are going to be able to qualify for a lot of things, and you're going to be, contributing to your Social Security. And also the other money you're going to be making is this 10,000 is actually kind of a bracket that's going to help reduce the other income that are going to be coming in, because you are going to technically be an employee of your own company. Now, as a JV, as a joint venture partner here, this is your company. We're just supporting from the back end. Okay, this is your company. We're splitting 50-50. We're doing most of the, like, actually the heavy lifting. What you're doing is putting clients in the funnel. And I'm going to explain a little bit how to generate the leads. Okay. But as a joint venture capital, this is not joint venture capital, the joint venture partner. I know I've said joint venture capital a few times. I'm used to venture capital. So joint venture partner, this is your company. So we recommend, for the sake of taxes, that you pay yourself as an employee, a W-2 employee of your own company. You can do that tax-wise, and it's very legal. That you pay yourself at least 10,000. You can pay yourself 20,000 as an employee. That's fine. Still your 50%. It's absolutely your 50% from your 50%. However, we just want that portion of it to be structured as you being an employee, so you can save on taxes. You don't pay too much taxes. So anyway, when we deduct the $1,000 licensing fee, which is, remember, $250 a week, and we deduct the 23,100. You can rewind this video again if you don't get what I said, so you can get it. But that's the part of the startup cost. And we deduct you getting a $10,000. You don't have to, but we're just assuming for this projection that you're paying yourself $10,000 a month, which is $120,000 a year. When we deduct that from the 65,000, we will have, this is just the first month. We haven't even put in the 6%, but we're going to get $33,867. Now, this is what we're going to split 50-50, guys. Okay, so you understand that. So let's calculate it. 31,867. So you're going to be making, divided by 2. So approximately you're going to make $15,933.50. Hold on, let's write that in so you guys can see it. So you're going to be making $15,933.50 plus, remember, the 10,000. So technically you're going to be making 25,000 or 26,000 in the first month without the performance fee. Now, this is based on our goal of bringing in 100 enrolled incubator clients per quarter, which is about 33 a month. Okay, so you're going to be making 25,000 or 26,000 approximately on the first month. Now, on the second month is where it gets interesting. The second month is where it gets interesting. So the same role thing applies in the second month, and now we're expecting the 6% to pay out, and we're using the minimum guarantee of 100,000 for these projections. So it could be $1 million. Some of these clients could be $1 million, some could be 500,000, 300,000, 200,000, 250,000, name it. It could be 2 million. It just depends. The only thing that differs is the timing. Okay, if it's $1 million, it's a possibility that it might not be on the second month to pay out. It could be on the second month as well. It just depends. However, the end result is still that it's going to pay the 6%, because we're guaranteeing them that we're going to work with them to raise at least 100,000. Doesn't mean it's going to be limited to 100,000. And they will work with us to raise at least 100,000, right? So if someone gets to that point and they want more money, hey, we can work with them for that. So let's use the minimum guaranteed amount, which is 100,000. 6% of 100,000 is 6,000. So 6,000 times 33. Remember, in the second month, we're gonna deduct our expense for doing business, like we did before. We explained it: $1,000 license fee, the startup cost, you paying yourself 10,000. Now, this month, the second month, we're projected to make about $229,867. Now we're going to split that 50-50. Let's calculate that right now. 867 divided by 2. So you're going to be making, you're going to be cash flowing net, okay, $114,933.50 plus your $10,000. You're going to be making about $125,000. This is just the second month based on our projections. And the same goes on and on and on and on. And who says that you can only stop at 33 clients a month? Who said you should? We're just making a projection because remember, we're not trying to joint venture with you to make the minimum amount of money. No, we're trying to make money. We're in business to make money. First of all, we're in business to help solve a need so people can be satisfied, so people can live a better life. So we are first in business to satisfy a need or solve a need, and then we need to be compensated for solving the need, because we're living in a financial society. Your electric bill is not going to wait for you to be happy before it comes next month. Your rent is not going to wait for you to be happy before it comes next month, right? So therefore, we will be compensated for helping solve a need in the society or community where we're at. There are about 28 million new businesses formed every year. So there is so much potential for you to make money while solving a need. Businesses don't know what to do to start their business and be credible enough for lenders to get them funded. We solve that need as an incubator. We bring them in, we help them create a credibility. We mentor them using our financial literacy educators every week, and then we get compensated for doing that. So as you can see, the first month is kind of lean. You're making about 25 grand if we add the 10,000 you're paying yourself. Now you don't have to actually pay yourself. Let's say you don't pay yourself 10,000 as a W-2 employee of your own company. You can still add it to this one and it will still be 26,000. It's still the same amount. We just want a portion of it to be structured, like I said, as a W-2 your own company for tax purposes. For your one of the things that we're going to do also is the same thing we're going to do for the incubator. We're going to do for the incubator clients, the same thing we're going to do for them. Like we're going to help them get an EIN number. We're going to help them get a commercial address, get a business phone, get an what do you call it, a website. We're going to help them get a custom email address. We're going to help them get a CPA relationship, an attorney relationship, a legal relationship. We're going to help them get QuickBooks and build a business credit. Now, with you as a partner of ours, we're going to get you a commercial address, which is part of what we do. We already have a commercial address for you. You don't have to use our commercial address, but we're going to also get you an entity, which we're going to do for the incubator. For the incubator clients, we're going to get you an entity, either a C Corp or an LLC, just depends. We're going to get you that, get you secured, get you your own website. Well, the website is going to be where you drive traffic to. So the website is going to be customized for you, to drive traffic to, and that's it. You're going to get us a right business, the right number you want to put on the website, okay? And once you get a client in, we contact the client and send them a DocuSign agreement, and then you are CC'd on it. You're copied on it, and you will know exactly the process, what's going on. When they sign it, they have 2 days to pay the $9.99 or it dissolves. So we're putting like a sense of urgency there for the client, and which is better for you to get paid. And I don't know if I'm forgetting something. Now this is for the joint venture partner. So yeah, now that reminds me how to generate the leads. Number one, I told you we have a database that can provide you leads of newly formed business entities in the whole United States. In fact, we have database for all businesses in the whole United States. However, newly formed are more susceptible to become our incubator clients than mostly established businesses. So, but we have leads for that. You contact them. Now, there's something else that you could do. You can hire financial literacy educators on a 1099 basis. to bring in, to fill in your funnel, which is something you're going to love. Once your business is established as a business entity, which we're going to help you form, you're going to then create a business account, right? If you are in the state of Texas, because we are in the state of Texas and we are in a specific region where we have access to a workforce grant. Now, this is for everybody in the United States who are interested, but we have access to a workforce grant that can give you, pay for you to have employees work for you. You don't pay nothing. They pay for you to have employees work for you, and they pay the taxes included and the liabilities included for the employee to work for you, and insurance and whatever they need to work for you for up to 3 months. Free labor. Now we can get you this based on our region, our specific region that we're in. So if you join us as a joint venture partner, you will, if you want to, you don't have to, you will have domiciled your business with our business, right? You domicile your business with our business so you can have access to this geographically restricted source of funding. So if you have an address somewhere else that is not within the area covered by this fund, because it's a taxpayer's fund, so it has to be restricted to a geographical area. If you're not in the area where it is, where it works, you would not be able to have access to the workforce grant that we're talking about. But that's a benefit for you. Once you get this grant, you can hire a call center agency that will blow your mind, that will bring in clients for you. Imagine hiring 4, let's just give an example. Imagine hiring 4, let's say 5 call centers or call center agents to blast phones with the leads we provide you. And imagine each 5 of them bringing you 5, because they're going to be calling a lot of people, right? They're going to be making about 50 to 80 calls a day. Let's say they're bringing 1 each per day. That's you making 5, bringing in 5 clients per day. How much is 5 clients per day times 5 days a week times 4? That's 100 clients in a month. So this whole thing we're bringing together, that is, you're going to be making about $300,000 a month. You're going to be cash flow about 200 to 300,000 cash flow a month. I don't know. I'm just giving a rough estimate. But this is what the workforce grant will do for you as a joint venture partner of ours. We're going to get you that workforce grant if you're domiciled within the geographic region that we have access to the fund. And then with this workforce grant, you can also target insurance agents. Now, if you are an insurance agent or agency, most agents, I would say, most agents write about 3 to 5 policies a month. Imagine writing 33 to 50 policies a month for business owners, the key person policy. So if you're an insurance agent, we need you to become a joint venture capital, I keep saying capital, right? A joint venture partner with us. You're going to be racking in a lot. You're going to be helping clients a lot. Now, this is not just about the money, which like I said, you're going to be compensated for helping solve a need. This is a need we want to focus on solving in America. Over 500,000 businesses go out of business every month in America. 500,000. Now, what is the number one reason? They don't have access to capital to grow the business and working capital. You're solving a huge demand in the marketplace. So guys, consider becoming a joint venture partner with us today. Remember, I said it's just $250 to get started. Just $250 to get started. And after that, it's $250 a week, which is $250 a week in a month is $1,000. That's it, 0% financing. And then after the 25,000 is paid up, which remember, once you make this money, you can decide to pay off the license fee. Once you pay it off, we give you $25,000 to do whatever you want to do with it. How amazing is that? It's like 0%. It's not even 0%. You're not paying anything basically. It's like you're investing for your future. But we have so much more than that that's too big to talk about in this one video. But guys, I hope this gives you an idea how to become a joint venture partner with us. 250 to get started, very minimal amount, and then 250 per week to make 50 to 250,000 per month without, I'm talking about net, by helping clients solve a huge demand in the market, especially at the time we're living in right now. So anyway, without any further ado, I'm not here to just keep selling you. I'm providing you the information. So we're going to split 50-50, take away the expenses. You don't have to pay yourself $10,000, but we highly recommend it. The client pays $999. So get yourself acquainted with what our incubator offers. We have an incubator video at diamondethical.com/incubator. And you write a policy. If you don't have a license, don't worry. We have people that will take care of that part, and you get your performance fee at the end of the day. We split it all, and you still make a ton of money. So anyway, guys, have a blessed day. If you have any questions, or if you know anybody that might be interested in this model and becoming a joint partner with us, joint venture partner with us, please message us at info@diamondethical.com. Info@diamondethical.com. Have questions, you can message us on Facebook on our Diamond Ethical page. Reach out to us, ask questions, we'll answer those questions. In the meantime, have yourself a blessed day. Bye-bye.